What is going on, team, and welcome back to yet another video. In this video, I'm going to talk about the one ICT concept that completely changed my life. Once I started looking for this within the markets is exactly when I started making money. It is one thing understanding liquidity, imbalances, and all that other stuff, but what I'm about to introduce you to is exactly what made me go from unprofitable to profitable, from not passing funded accounts to passing funded accounts. Okay, it is one of the most simple changes that you can make in your trading, yet it makes all the difference. And what we're going to be talking about is displacement versus a lack of displacement, and what PD arrays are we holding and what PD arrays are we violating. If you have seen my YouTube channel before, you have heard me talk about this 1,000 times. This is something that I stress and I tell everybody, please just go ahead and look for this. And once you look for this, is exactly when you will understand how these market book. So let's jump onto the charts and let me show you exactly what I'm talking about. All right, here we are. And this is a great example of how I personally find every single trade that I put on, or most of them. So as you can see, we have equal lows down here, meaning that we have two lows that we have not swept yet. Equal lows, very likely to get hit. As soon as we take out a high like this, that is when I am interested in watching the market, right? I want to see how the market reacts to hitting this high, and I want to pay attention to displacement above it or not, right? If we are failing to displace above this high, that is exactly when I want to get involved. So let's play it out here for a little bit. And as you can see, we are obviously failing to displace above the high. Now, as soon as we get this candle here, that is exactly when I look for my entry, because this right here is a displacement candle. So all of a sudden, we are now failing to displace above the high, and we are obviously successfully displacing lower. And we actually displaced through this bearish or down close swing low, forming a bearish market structure shift, right? So all I want now is some sort of PD array that I can enter off of. So we have a very small survey gap right here, which is completely fine if we can retrace back to this. So I'm going to go ahead and place my entry here, stop at the high. I'm going to target the equal lows. So obviously this is a small imbalance, but it is still completely fine when we take the displacement into consideration. Really all we need is something that we can enter off of. There we go. We are now filled and we play it out and we rally down lower. Now it took a while to hit the equal lows, but again, trading does not get any more simple than this, and I promise you this is all you need. And once you start focusing on it, you will just watch yourself grow. What did we look for? Again, we had a high here, and all we wait for now is for that high to get taken out. Obviously, the only reason why we are monitoring this high is because of these equal lows. If you know anything about liquidity, you know that equal lows are very, very likely going to get hit. So as soon as we take out this high here, I am watching for a lack of displacement when we hit the high. And that is exactly what we got, right? This right here is definitely not displacement. So where do we displace towards then, right? We take out the high, fail to displace higher, and then we start to displace towards the lows. As soon as we get this displacement candle, right? Obviously, a lot of bearish volume behind this candle, aka displacement. That's exactly when I look for my entry. And to be honest, I don't even care what PD array is sending me towards those equal lows. All I care about is some sort of entry model, which we got here with this very, very small imbalance. Overall, very successful. And I only looked for these three things: equal lows, failure to displace above the high, and successfully displacing lower. Okay, those are the only three things that I looked for. So I want to be confident about my drawn liquidity, but I also want to pay attention to how we react to hitting a high. Because if this is the drawn liquidity, if this is truly where price wants to go next, this high should not get displaced above, right? It should not get displaced above. So as soon as we don't, I'm now extremely confident that the next drawn liquidity for price is these equal lows. And now all I need is somewhere to enter, which this very small imbalance gave me. If we go to a lower time frame, like the 2 minute, probably we can find something else. Exactly, this was obviously a 2 minute order block here and a bigger 2 minute imbalance as well. So just because it's a small 5 minute imbalance here does not mean that it is not a bigger or a more significant imbalance on a lower time frame. So that right there in a nutshell is exactly what I look for. Now let me show you a couple more examples so it really sticks with you. So looking at this right here, we obviously have a swing high here that we just swept, right? Perfect swing high, and we just swept it. But the only reason why I'm paying attention to this swing high here is because of the immense amount of low resistance liquidity that we have built up down below that swing high, right? So probably thousands and thousands and thousands of retail traders have been going long off of the retest of this trend line, right? A lot of retest on this trend line here, and a bunch of people were taught from the beginning that this is how they should trade. So hundreds and hundreds and hundreds and thousands of people are going long each time price hits this trend line, right? And every time someone goes long, their stop loss goes either here, 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 or here. So that means thousands and thousands of stop losses are built up down below these lows. And when we have a swing high like this, I want to pay attention to how do we react to even that high. Do we displace above it, or do we fail to displace above it, right? So we'll see here. So as of right now, we are not showing any sign of displacement, right? This is obviously not displacement above it. We're consolidating after hitting the high. So we want to pay attention to how we react. And there we go. Price goes flying, right? Now, why am I okay with still entering this position? Well, there we have obviously not taken out all the stop losses of this trend line. I am honestly expecting us to come down here and sweep these equal lows to make sure that no retail trader gets out alive, right? Price probably wants to take all these stop losses of the retail traders here. So I am looking for something to send me down towards those equal lows, which this fair value gap is going to do. So entry right here, stop goes above here. So we have the gap included and the volume imbalance. And then we'll target the end of that low resistance liquidity, aka these equal lows down here. We'll play it out. And as you can see, price rallies straight to our TP. And again, all we looked for was failure to displace above the high. We hit the high, we consolidated, and we really failed to displace above it, right? We get these two rejection candles here showing no sign of wanting to go higher, aka no displacement. What happened after that consolidation? We then got displacement. As soon as we get this big candle with a lot of volume behind it, that is when I start looking for my entry. Now, obviously, it swept one of the lows inside of the low resistance liquidity, but that's completely fine, right? Because we have still all these lows open that needs to get filled. The rest of these traders needs to get stopped out. So when we form an imbalance here, that is when I am going to enter, right? Because the probability of this playing out in my favor is extremely high. We are displacing in my direction. We are failing to displace up, and we have a bunch of stop losses at the low resistance liquidity. A+ setup here, extremely great. And all we're looking at is a drawn liquidity. Are we displacing above the high, or are we not? And are we displacing away from the high, right? Exactly as we did here. Failed to displace above the high, successfully displaced away from the high. We have our drawn liquidity here, and we have our entry model right here. And that's all we need. And literally, once you start looking for this, trading becomes so much easier for you. And I promise you, you will see immense results once you just start looking for these three concepts. Displacement is probably the most important thing to take away from this video. You always want to have some sort of displacement backing up your trade idea. Now right here, I obviously had this large candle as my displacement for this trade. So I'm not just entering when the market is in some sort of low volume state. I know that we have a lot of bearish displacement here. And that is exactly what I want, right? You don't want to get caught up in something like this. You don't want to get caught up in something like this. So you want to wait till you get displacement after sweeping a high. Very important. And then you want to match that with a drawn liquidity. And that's all you need, I promise. Very short video, yet very valuable. I promise you that not looking for displacement is the #1 killer of ICT students. People simply fail to understand how important it is to look for displacement. And as soon as I understood how important displacement really was, is exactly when I turned profitable. Then obviously you can combine this with a bunch of other stuff like inversion fair value gaps to give you a better idea of where price is going and if your drawn liquidity is actually correct. Because if we have displacement lower, we violate 2 bullish gaps with that displacement, after taking out a high, then probably we're going to go lower. So the key thing to take away from this video is watching for displacement and a lack of displacement. Then you also want to pay attention to, are we holding bearish PD arrays or are we holding bullish ones? If we are coming from a bearish gap violating a bullish one, that automatically tells me that we are in bearish order flow, since we are holding bearish PD arrays and failing to hold bullish ones. That is basically how I determine where price is going to go next. I look for displacement and a lack of displacement. I look for what PD arrays are we holding and which ones are we not holding. And that is simply it. So I hope you enjoyed, and please just go ahead and start looking for displacement within your trades. Quick announcement, this Sunday I am releasing my premium Discord. It is a Discord I have been working on for a while. I've gotten a bunch of questions regarding live trading. I have traded live a lot in the past, and I'm going to start doing it again. Okay, so that will be from Monday till Friday. I'm going to be live streaming New York AM session every single day. I'm going to be hosting weekly charting sessions. You're going to get access to trading templates, 24/7 support, crypto hunts, and much more. All that for $45 a month. And what I did was I scouted the market, and I found out that, okay, the average price that people are charging for their Discord services is around $100. So I decided to price it significantly lower than that, because I understand that $100 is a lot for a lot of people every single month. But I still wanted it to make sense for me to waste my time on. So the WAP link will be in the description of this video. Now, this is not something that you have to do whatsoever. I also have a free Discord. We just won't get the premium outlooks, the trade ideas, the live trading sessions with that free Discord. But there's still benefits to being in the free Discord, of course. So I hope you enjoyed, and I will see you in the next video. Bye bye.